The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 23rd terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what each of us must master each and every day. So let's begin with an empowering thought. You know, success, folks, success comes from taking the initiative and following up. It takes persistence and maybe eloquently expressing the depth of your love for whatever it is that you do out there. Question for you. What simple action could you take today to produce a new momentum towards a new success in your life? What simple action could you take today? You should be able to write that down on a pad of paper. Think about it for a moment. Come up with that action and start moving toward that. Gets a little momentum behind it. In fact, once you've identified that simple action, well, you know what's coming next. Remember, that path to success is to take what? Massive, determined action. That's right. There's no abiding success, folks, without commitment. Commit to it. If you want to be successful, I say find someone who has achieved the results that you're after and copy what they do. You'll achieve the same results, folks. There is always a formula out there. That is the formula for success. If you like chocolate chip cookies, go find the best recipe for chocolate chip cookies. Follow that recipe. I promise you, they will come out the same. It works the same way in success. So let's go take a look at the success in this market here. Right now, we've got the Dow up 117 points, trading at 14,683. The S&P 500 right now is up almost 10.5 points, trading at 15,72.91. Looks like 15,76.09. That watch is back in place out here. NASDAQ Composite up almost 30 points, trading out at 32.63. Russell 2000 trading at 924 and a little bit of change. NASDAQ 100 up 28, it's up $24 basically, trading out at 28.34. We've got the New York Stock Exchange. That's a little weak out here. That's up 0.6%. That means the broad market is not exactly joining in on this party. It is up $54, trading at 9,074. Gold is pulling back a bit. It's trading out at 14.08. It's off $12. Of course, that's because of some of the strength in the U.S. dollar index. The Queen here is pulling back off of its session lows this morning. We have the silver is off 47 cents. That's down a little over 2%, trading at 22.85. Light sweet crude down 75 cents, trading at 88.44. Our call-in number is 877-927-6648. Let's start off by taking a look at the indexes out here and see what it is that is going on. Let's start off with the S&P 500. The S&P 500 on, let's see, this would be Thursday, right? Thursday, Friday, Monday, Tuesday. Up on Thursday out here, you know, the S&P 500 was testing that hammer candle. The hammer candle back from April the 5th. That low out there was 1539.50. Tested it on April 18th. Got down to a low of 1536.03. Closed back above the hammer candle. That was a successful test of bulls defending their position. Then on Friday, gets down to 1539.40. 1539.40 versus 1539.50 by 10 cents. You got to love that. And then forms a bullish engulfing candle. Now what we have going on here, you're looking at the rising price channel. A narrow channel for sure, but a rising price channel nonetheless. We're using the co-located opens and closes, the largest number of them. There's a ton of them along the top here. Along the bottom, you're using the using the close of November 16th. You're using the close of the February 27th out there. I can say at least I'm using that territory. And then I'm using the close of April 5th as well as the open on April the 8th out there. Now what we can see is 1576.09. Did we actually hit it today? 1575.16. No, 1575.16. So you're going to have the S&P 500 trying to get back above the 2007 highs. We'll see if, in fact, it can do that. It hasn't tested that. You'd sure like to at least see it test that before it gives you some information. Of course, it's early in the trading session. We are only 41 minutes into it. So we'll see what the S&P should be giving you a signal here a little bit later. You get about 1576.09, well, then it will go ahead and test the highs once more, and that would be the April 11th high, or at least the April 11th swing point, I should say. That would be anywhere between 1586.17 and 1597.35. Right now, you're testing horizontal and you're testing diagonal resistance, with the S&P trying to get back into that rising price channel out there. That is on the S&P. Let's go take a look at the Dow. Let's look at the top line number here. Let's go see what the Dow is doing. Of course, yesterday, we were looking at the hammer candle that was formed on Friday. Where's my Dow chart? There we go, right in front of me. That's all I had to do. So on, did I say Friday? Yeah, on Friday it formed that little hammer candle, not a little hammer candle, an important hammer candle. Let me pull this back a bit for you. You're really using the same technique, that rising price channel coming off of the November 16th low out there. The Dow only broke through this level here once. It did it back in December 31st. Well, it actually broke through, I should say, on December the 28th out there, and then it created that little bull sash candle right here and got back inside that price channel. Now, what happened on Friday? Friday creates the hammer candle. Yesterday's candle was not a hammer candle at all, just simply a small-bodied candle out there. It was testing the low of that rising price channel, which held. Now today it's running into an old area, very old area of resistance that was set up by this little bearish engulfing candle back on April the 3rd. That high, 14,683.13. You've been up above it. You're trading at 14,688. You're trading slightly above it right now. We take a look at normal spots for the Dow now to move towards. If we just take a look at retracements off of its high from April 11, 2013, down to the low of that hammer candle, we'll see that sweet 618 is just above. 14,718.10 is the number. Hasn't hit it just yet. 0.786, that is more likely the target. That would be 14,792.61. That would also take you right into, or very close to, the low of April the 11th. That low actually is 14,785, so it would take into it 14,785.36. I suspect that's where the Dow wants to move to on this bounce. It's all going to be about some volume that we see in the marketplace. It certainly wasn't there yesterday. We'll see if it is there today. That's on the Dow. Let's go take a look at what should we take a look at next? How about the composite? Let's go look at the composite, see what it is doing. I believe it gapped up this morning. So let's go take a look at the NASDAQ composite. We'll pull this chart down. Yes, it did gap up. The composite here now trying to trying to go test the rising price channel that it broke out of with conviction. It broke out with conviction on April 15th, and then we had additional conviction on April the 17th. This is perhaps the most important chart to be paying attention to. Why do I say that? Well, because the NASDAQ, we had the Russell 2000 break out over its 2007 highs. Did that back in the early part of 2013. We have the composite that also has done that. So I say it's a composite that you're going to want to be paying attention to. We know what the composite also did here as it was making its high back on April 11th was a 1.272 butterfly. That pattern has worked out so far. Let me get rid of this. Bugging me. There we go. And so now what you've gapped up today, and what that says, there's no bullish candle really other than today's gap up. That certainly is bullish out there. And so there was a little hammer candle right here back on this trading session from April the 3rd, but we don't need to be paying attention to that. So where could this travel to? Well, let's just take a look at retracement levels here. We'll go ahead and blow that up on the screen for you. If you are following along with us on Tiger TV, thanks so much for doing that. Maybe you're listening in on the radio or your mobile device at tfnn.mobi. Remember, this show will stream live to your smartphone, your pad device out there. If you go to the homepage of tfnn.com, on the right-hand side, you will see the button with 3 smartphones. Click on that. This show will stream live, and the archive of the show is on channel 10 out there. The .786 retracement of the composite would take you to 32.74.42, but in doing that, it would not tag the bottom of the rising price channel. It probably would have to move up into about the, I would say it would be testing the April 11 swing point low right around 32.87.74. So at the moment, it looks like really that's where it is likely headed to in the marketplace. Let's go take a look at the Russell 2000. That had been the week link out here. We did see that nice hammer candle on the futures contract. We look at that both on the 30-minute chart and the daily chart in those areas. Those hammers really did hold out here. As we take a look at the Russell, this had a little bull sash candle on Friday. That's this candle right here after making its low. Right now, it looks like the Russell 2000 still having a nice move, but weaker than the other indexes that we took a look at. If you come off of the swing point high from April 11th out here, you can see it has not even gotten to the .382 level. That would be about 931.15. Looks like it's headed for the 931.15, but more likely the top of the downdraft that began on April 15th. That is 938.67. Just above it at 940.05 is your .786 retracement level. That's on the Russell. Let's go take a look. So we've done the Russell, the composite, the S&P. Let's go take a look at the good old NDX 100. Let's do that out here. Let's go see what we've got happening here in the NDX. You know, it's all going to be about Apple later on today. That's at about 4:30. So at about 4:30.01, you'll be wanting to tune in to Tom's show to see how the market is reacting. As we take a look at the NDX 100 as it was making its move lower last week with not with the same conviction we saw with inside the Dow and the S&P 500 when we take a look at volume, or specifically if you go take a look at the Qs versus the SPY and the diamonds out here, but still moving lower was not enough to go ahead and break through that strong support area. When I say not even strong enough to break through, it never got down to really test it, which was the low of January 2nd out there, 27.16. Only got down. In fact, it looks like it was probably just a normal retracement. If you go from the low bar of February 26, 26.89.83, from that low to the high that was put in on April 11th, the .786 retracement, that number would have been 27.27. It actually got down to 27.30 out there, and just a little bit of change. Now what we're seeing is the bounce, and looks like this is going to head all the way back up to the area of resistance, which was the original downdraft, taking you back to September 21st out there. Now, here's the key. So I wonder if this is actually a clue out here. As you know, as I believe you know, we've been looking at this .786 Gartley pattern here for quite some time. In fact, it actually went ahead and completed on March the 5th. So March the 5th, you see a move up, a gap up. You're gapping up into the D point. That's really what this price point projection is of 2802 that you're watching, that you're looking at on my screen out here. It's a .786 retracement. It's a completion of an A to B equals CD. When you gap up into a D point, it says take a deep breath. Be concerned out there, because when you gap up into a D point, it usually means it actually wants higher price if you're gapping up as opposed to gapping down. Man, we're running out of time. We're going to come back. We're going to take a look at the NDX 100. We're going to take a look at the signals out here and say, something to think about. 877-927-6648. Dow's up 127. S&P is up 12. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow's up 131 right now, traded 14,697. The S&P is up 13 at 1575.59. Let's go. You know what we're going to do? I'm going to switch over to the actual Qs, since everybody I know that follows along here at least has access to the QQQ versus taking a look at the NDX 100. And so I'm just switching over. It's really the same exact patterns that we're looking at here. This will give us some good volume to take a look at. So what I was saying is that back on March the 5th out here, we had the Qs gap up in complete the 0.786 Gartley buy. If we take a look at the A to B equals CD, you'd start off with the November 16th low as your A point. Your B point would be the move up to December 19th, and then the pull back right here to the level of December the 31st. The one-to-one completes at 68.99, so that really came in on March the 8th out here. So you can see you've got the completed A to B equals CD. You've got the 0.786 retracement. You've got nice Fibonacci numbers on this. I mean, it doesn't get more textbook or beautiful than this with regard to your Fibonacci numbers. If you take a look at your retracement here and your A to B equals CD up, that was a 0.618 retracement. And folks, if you're struggling at all to watch this on Tiger TV, do yourself a favor for at least 30 days. Go to the homepage of TFNN.com and sign up for the Tiger's Den. All these charts are in HD. You'll be able to see them really clear. So you see that 618 retracement. You also see an expansion of the B to C swing point. Now, that's what I'm referring to as it formed and it made the D point. You had a nice 1.618 expansion. So there's your other Fibonacci number. The retracement off of the swing point high from the 19th all the way down to the low of November 16th, as was making that D point, was 0.786. So you've got them all. You really, it doesn't get more beautiful. Now, this pattern should absolutely have held. Now, as it was gapping up on March the 5th, did it with 35 million shares, but that gap up says, ooh, be careful. That was not the place to actually go ahead and take a trade. You had a little dark cloud cover here that following that candle session, but really we never broke below the body of this candle. Remember, the body of the candle, and really the body of the candle, you need to fill in the gap here on this to really have truly broken to really have broken that candle. So never did it really do that. So from the period of March the 5th all the way through April the 10th, so you're looking at over a 30-day period of time, it held, and finally it cracked, and it cracked to the upside. As it cracks to the upside, you've got 55 million shares moving into the downdraft and into the swing point that only has 23 million shares on September 21st. Even the downdraft day, if you take the higher volume day, the 24th, only 32 million shares. So this was moving up there with volume, with conviction, 55 million shares, as was moving into the swing point. That line there, the black horizontal line, it's still held as resistance. Resistance is resistance. You want to go ahead and measure it. You want to have at least a couple of tests of that area. We've had 2 to 3 tests. You can say that, quite frankly, the test of September 25th was a test of that. Certainly, we can take a look at, because you want to be able, you need to move the line up and down just a tad out here. So you can see that level has held. So it is a strong area of resistance. You've got some bears out there. You've got definitely the naysayers, and that's not a bad thing. That's where the bears are hanging out. But what is happening today, now on the move back down, because that red horizontal line going across my screen here, there's 2 positions here, at least 2 positions where we've got bulls that are hanging out. Now on the low of January 2nd out there, that low was tested, big time. So the real battle is in between the low of January 2nd, where the bulls are hanging out, and where the bears are somewhat hanging out here. Just simply looks like the bulls are taking up some of their resources from the lows here, because they have so successfully defended that gap up on January 2nd. They're bringing them forward. That's what happened here on April the 10th. Now what you are doing is, yesterday you came up in that area with 34 million shares. That was 34 going into 55. You rejected that area. Today you're inside that swing point. 11 million shares in an hour of trading. So you've got more volume than you did yesterday by far. If you just did the straight line math on it, which we can't do, but if you did, you'd be looking at about 70 million shares compared to the 55 million shares from April the 10th. Now, the reason why we're actually even spending any time here, well, is because I want you to think about what it is I'm going to say here. A .786 Gartley, you've heard me say this before. When they fail, they often turn into butterflies. And at this stage, this one has definitely failed. And if we take a look at the 1.272 expansion of the Qs, if in fact Apple, how about that? If Apple does break out today, the Qs should move up to $73.10. That will go ahead and form that 1.272 butterfly. It doesn't have to stop at 1.272. It could actually go all the way up to that 1.618 level. And with all the nice Fibonacci numbers here, that's really where it would likely head to, which would be 76.31. Something to think about. We know where the bulls and the bears are hanging out. Right now, it's the bulls in control of the market. The Dow's up 135. The S&P trading at 1576.29. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's up 133 right now. S&P trading at 1576.43. You know, we talk about taking a look and understanding, visualizing, seeing consolidation patterns out here. You know, we've been looking at the consolidation pattern of the 30-year Treasury note. We know that it was consolidating from the January 2nd gap down level. That was the 144.29 all the way down to the lows of February the 4th. You could use actually the low if you wanted to of March the 8th. But basically, we're using the low here right around the February 4th level, right around 140.23. Now, when you break a consolidation, what happens? You typically are going to do at least that same level. We'll take a look at what bonds actually did today. As you know, we've been saying right in the 149 area is where that move would take you to. What bonds actually did here, they got up to a high of 149.06. They have since given it up here, so they have made their move. They have made their consolidation move. Now, they've been trying to break this B point here from April the 5th. That's got 531,000 contracts. They have not been able to take that out with volume out here. If they, in fact, can, then bonds will move up to their second objective, which is 153.21. But right now, bonds have actually done what it was that they were supposed to when you break a consolidation level. Let's go to Concord, Mass, to our man, Mark. Mark, thanks for calling. Thanks for holding. How are you today?
What? How are you, Steve?
I am doing excellent. Thanks for asking. You wanted to look at the S&P 500, the SPYs? Tell me what you wanted.
I did.
Okay.
My question is, okay, so we got over that 1576.09. We're about a half a point above it. My question is, are we just going to keep going up? Again, talk to me, because you know I have a couple of friends who listen to TFNN who are non-technical. So
Sure.
Talk to me and talk to them. I keep telling them to call, and they say, no. You know these guys, so I get to be the villain
You're
here.
You're the voice of Massachusetts. That's
I'm
a
the voice
thing.
of my friends anyway. I don't know about the voice of Massachusetts, but they're not technical, and they said, okay, how high is this thing going to go? Because it seems like every time we try and come down, we go right back up. And they keep saying, well, Tom keeps talking about this light volume. And I said, it's all about the charts. They say, no, I'm not a technical. I don't read charts. This is over my head and all this kind of stuff. So talk to my friends in non-technical stuff. Where do you think we are going? And how much, in your opinion, Tom keeps talking about very, very light volume. He talked a lot about that yesterday on his show, and
Sure.
which I agree with. But the bottom line is that volume or no volume, we are going higher. And, how much do we play into this?
Well, so on a non-technical term, I would just simply say what the market, what we're about to do here. Today's April 23rd. Come next Tuesday, so a week from now, will be May 1st. And, I'll do a little study. Probably won't do it today. I don't have enough time. But I'll put up a chart that takes a look at just the simple 6-month cycle that is out there. Now, the 6-month cycle of sell in May and come back in November, that doesn't mean that you totally have to stay completely short that entire time period. But we did see a rejection of that 1576.09 level inside the S&P 500, and when it came off of the top, it came off with conviction, with selling, with significant volume. That's volume off of the top. Those patterns suggest that what you are going to see is you're going to see a deeper retracement. What oftentimes happens when you see any stock, so it works the same on an index, the first sign of institutional selling is volume. I mean, it's clear. It's not going to be you and me and your friends, in your area that are going to typically have enough volume to be the ones that have volume off the top. It's institutions that are going to be selling. We have seen that inside the Dow. We've seen that inside the S&P 500. Right now, all you're doing is going back up into that level. I can't tell you where it is exactly going to stop. If if it closes over 1576.09 today, as at 1576.25, says to me that the high of 1597.35 is in play, even if it gets higher than that come a week from today. And the time frame I'm looking at is anywhere between a week from today and 2 weeks from today. So sometime in between that time period, unless there is volume that comes into the market to the upside, what the volume characteristic has told us is that you've got some real selling out there, institutional selling. So oftentimes when you see institutional selling, whether it's in an equity or an index, the market will give you a couple of chances to get out. This is a market where absolutely buying the dips has worked. And I do think longer term, I think the markets go higher because there's certain divergences I look at that I don't see. So I don't think this is the end of the entire move. I just think that what we're going to see is we're going to see that sell in May cycle. We're going to see that cycle where money managers that have been in on the move have made they want to protect their profits as well. They want to go have a nice summertime, and they can certainly do that by lightening up their positions. So my personal opinion on this matter is that we are going to see a market that is going to move lower, and the only thing that will change my mind on that, Mark, is seeing volume come into the marketplace to the upside, and we have not seen that. And absolutely, the market volume yesterday was horrible. The volume, the bounce that we saw last week, a week ago Tuesday, was horrible. And so,
you know what would help, my friends? You know what would help, my friends? A non-technical newsletter from you and or Tommy. If you guys wrote a newsletter just for the average guy on the street, who I could say, hey, subscribe to this. It's a non-technical newsletter. It's written by two guys who are technical traders, but they're talking to the guy on the street. They're not talking to the trader. They're not talking to the guy who's going to be in and out of a trade in 30 seconds. So they're talking to the guy in the street. That is what I think my friends would really like.
Well, you know what they should do here? I think the first step is always to take, action. And I think one of the first action steps would be, I'll give you, is go over and have them sign up and test my newsletter. There's a ton of information there. Yeah, a lot of technical information, but they can bypass that. The front page or two, gives a very good explanation. I think a good explanation of what's going on in the market and why. There's information on the long term, and they can try it for 30 days. There's no, it comes with a unconditional money back guarantee. That's where I would start if I were them. And just because they're not technical in nature, it's not just technicals that I look at or put out there. So that's where I would start with.
I know they're listening, so I hope they take your advice.
Yeah, I mean, I think that's the easy way. Or, when you did, so I explained to you, my thoughts about where the market is going and why. Did you consider that explanation to be technical, or?
I thought that was very, very good. I give that maybe an A-.
Hey, I take A-minuses. You don't know what my report card looked like in school.
See, you don't know mine.
But no, so that's I mean, it's just really understanding there are simple cycles, and the sell in May has absolutely worked. I don't know what the percentages are, but it's a pretty significant percentage, and certainly has worked the last 2 years. And I think we got those first indications when we saw the volume come off of the highs here on April the 15th. That was really a great indication. So the market could move up today, tomorrow, could move up through May 1st, May 8th, until volume comes in where there's where you really see the demand, because you've got volume moving in. I won't change my opinion on it. That doesn't mean I'm not short the market here right now. I'm waiting for it to make some additional tests. And today, right now, we're seeing the S&P try to get back inside the rising price channel out there. But without any real conviction behind it, I think the market is going to go lower. The overall move is not over to the upside. I don't believe that's the case when I take a look at monthly charts out here. Are
you in the 25 camp, meaning, Tom's talked about the say 25 for quite a while. Are you in that camp?
That's I haven't heard Tom speak about that for a while, and that's not so. I'm neither in nor out of that camp. That's not really. It's not anything that I'm focused on. Okay. I think that's probably it's nothing. It's nothing where I'm focused on right now. I would be focused on what's going on in this leg here. And I think in this leg here, it says the market pulls back to January 2nd, maybe December 31st, and that's probably the extent of it. That's nothing more than just really a normal retracement. The 0.618 level gets you to 1440, and that's right inside the January 2nd breakout area. That was the last time we saw any volume to the upside. And I think that would be a normal move, and people might be writing things off at that stage, but that's where I would be looking to probably get back in. But the thing is, I think you just have to look at things. You got to take information. The market doles out information to you each day, and it just depends. If you're a trader that's intermediate term, you should really focus on weekly charts. If you're a longer term trader, really monthly charts, and then not worry about the daily gyrations, because they're going to happen. And if you're more of a shorter term picture, then you just simply focus on the daily charts. And I think you have to get set in your mind what is your trading time frame.
I think my friends get sort of confused where they talk about where they hear light volume, that we can't go any place on light volume, and then they see that the market's going up.
Yeah.
So
well,
anyway,
that's the role of the market. I mean, the market is supposed to, it's supposed to try to push prices higher on light volume. You've got to be very wary. You can look at any stock chart, and you should look at any stock chart, and immediately you should go to where is the volume, because if you had one breakout session and it's way below, and that's the last time you had any volume in it, and the market does fall apart, you've got to be very careful. Here's a great example, just to use it. Here's an example. I'm going to pull this off to the side here. So here we're taking a look at Coach, which is having a nice day today. And, Mark, if we take a look at Coach and you go back to July 31st, 2012, there is no question that what will stick out to anybody who's looking at that chart is a high-volume low. That high volume low means there were 34 million shares that came on, that moved down. Now, the very first time, as Coach was making its highs out here, as it was making its highs back in the time frame, actually made a high on March 27, 2012. The very first time that you saw any kind of institutional selling was right back here on April the 3rd, 6 million shares. The market, bounced higher a bit here, and then the next time you saw institutional selling was on April the 24th. And then it went ahead and it bounced higher. But you see how the market, when you start to see those high volume down days, it's giving you an opportunity to actually get out. I say you get out, you always have stops in place. So if you weren't stopped out or you got your stop was jumped, go ahead and take your stop at that stage. This actually makes a hammer candle with a small gap here on May the 8th. But that's not so much my point. My point is, as it was at its highs, it gave you a couple of opportunities, some signals that there was institutional selling here. And what the institutions were doing all the way down, they had people were buying Coach here, and they were selling it all the way down. And then finally you had a real markdown take place on July 31st as it makes a low at $49. That's going from $49 to $78. So there you're looking at about a 40% haircut. Now that high volume low, as this equity here bounces up to a level of $63, as it bounces up to $63, you've got to know that there's that could easily go back and test the $49 level. And what does Coach do? It never gets above that level there of $63 and moves down again with volume. Does that on January 23rd. So that's just looking at, and I just randomly picked out Coach. I picked out Coach because it was having a real nice day today. But you can see here that the signatures off of the highs, when you start to see volume off of the highs, that doesn't mean it's going to be continuous selling. It really means there's usually a couple of opportunities to get out. And guess what today is? Today is opportunity number 2. And it could be today, tomorrow, what have you. We're now in that second opportunity here where I believe because of the selling that we've seen, the institutional selling that we've seen, I don't believe that it is over. Okay.
And thank you so much, and I hope my friends take your advice.
Hey, no problem. No problem. Thanks so much for calling.
You take care, buddy. Have a good day.
Absolutely, absolutely. And so speaking here of Coach today, folks, we're seeing this gap up. It is inside the gap out here. That gap was this last time we saw institutional selling, January 23rd, 50 million shares to the downside. So far today, in the first hour and 18 minutes of trading, 10 million shares to the upside. So it's having a nice day here, but all of the real pressure inside Coach really is to the downside here. And you can see what it did do is it came back here, what it should have done, which looks like the original breakout area. So as we take a look at the original breakout area inside Coach here, that would take you back to October 25th, 2010. And that had a nice breakout there. That breakout back then was with 13 million shares. And when it came back and it tested that level, it did it with 9 million shares back here in August of 2011. And then came back here and did it with 6.7 million shares. So that level is held. It's a pretty decent level of support out there. But that's how you actually, that's my advice for using volume. Always go to a chart, take a look at the volume on it. If you've got high volume days or you've got selling off of the top out there, it's all kinds of signals that the selling is not done. And that's what we have going on in the marketplace here right now, even though you've got the Dow up 136 and the S&P up 14. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow is up 127 right now. S&P trade at 1576.10. That's up 13.6. And, had a great call earlier, if you caught it, with Mark from Concord, and really just taking a look at characteristics of markets or just stock charts. Just simply, it could be whether it's an index, whether it's a commodity, whether it is an ETF, whether it is a stock, it doesn't matter. They all really work the same. Now, that's the cool thing. Whether it's a currency. The cool thing is that you only have to, once you learn the patterns out there, once you learn the signs, it can be applied to no matter what it is that you're trading. Now, I'm taking a look at here, so again, this was random. I used Coach as an example. COH was a ticker symbol during the last segment. All I did right now is I went to my screen and said, I'm going to take the equity that has moved the highest percentage lower today. That happens to be IIVI, IIVI Inc. They refine, manufacture, and market materials and optoelectronic components. Used mirrors for using CO2 lasers, and I used to be in that industry, and maybe I even bought products from them or through one of their distributors. Nonetheless, let's take a look at the stock chart here. Now, this stock chart, we're going to look at a weekly chart because we were looking at a daily chart on Coach. So, let's take a look at a weekly chart. This equity here actually makes a nice high-volume high back in April 29, 2011. Wide price spread, wide accelerated volume, 4.3 million shares, goes from a low of 23.71 up to a high of 29.96. Now, as this starts backing off, the first time that you saw any kind of bearish candle out here was right here the week of June 3rd. And you see that bearish candle that, you may or may not have gone ahead and you would have started to lighten up on your, depending on, assuming that you were somewhere in the move off of the lows in July of 2010 when you're at $14 and you're all the way up into the $30 level. You've made 100% return. You better start putting some stops in place or lightening up your load when you start to see some bearish reversal candles. But let's focus on the volume here. Take a look at this real sign. This is on a weekly chart of institutional selling. This is the week of August 5th, 2011. 5 million shares to the downside. So it's making a high with 4.3, making a moving off of that with 5.1 million shares. What does this also do? It makes a lower low back in the week of October 28, 2011, at 4.6 million shares. Definite selling. As this starts to creep up, it's doing it with light volume. Just take a look at the volume on the bottom of that chart there. Making its way up, never made it up to the actual downdraft. The daily probably gives us more of an identifier as to why it stopped at around the $24 level. But nonetheless, the next time you see you see some more selling in this on June the 15th, you had a hammer on this thing here on a weekly chart. Does not look good. Why? Because where the bulls are hanging out here was November 23rd, 2012. That was a hammer candle out there. That hammer candle now this week has been broken. That low is 1532 out there. Broken through, you're at 1476. You're going to see more institutional selling here today. This equity breaking that hammer candle says it's going to come down to most likely all the way back here at least February the 5th in the 1261, 1360 level. But there again, the market gave folks that were inside this equity a couple of shots to get out of it, and those that aren't paying attention to volume off of the top, you're just missing out on the clearest signal inside the marketplace. And until you start to see volume to the upside, when you see volume to the upside, then you can go ahead and you can draft behind those bulls out there. But otherwise, right now, we've got a market that has given us signals that it does want to sell off. That doesn't mean that it won't move higher. Folks, stay tuned. Basil Chapman is up next. And remember, folks, the way you do anything is the way you do everything. I say, become a pioneer of your future versus a prisoner of your past. Have a great day, folks. I look forward to seeing you tomorrow morning. Take care.